So the top 5 big tech guys like Apple, Microsoft, Google, Amazon, Nvidia, we're still looking for solid earnings. And it feels like that is what's going to be propping up overall S&P earnings. That's what some strategists are talking about. What do you see? And we have to start pricing in the kind of risk we're now talking about. Does it change the scenario for the overall index?
So look, I think the way that the Magnificent Seven, the Big Five, whichever ones you want to focus on, the way that goes, that is going to have an important ripple effect on earnings and S&P 500 price action. The presence of those stocks in the market cap weighted indexes is just too great. And we do know that big tech companies have really been propping up margins in the S&P for quite some time as well. So we obviously care about them. I think the real issue for me is not necessarily looking for those companies to fall off a cliff, but rather to have some competition on the earnings front. So when we go back to the first half of the year, those kinds of companies, the growth part of the market was really the only game in town in terms of where you were seeing excitement around earnings, where you were seeing upward revisions. Well, guess what? Now we're starting to see upward revisions to energy companies. That's really been a change that happened around mid-year. You went from negative to positive revisions. And financials are actually starting to see a tremendous healing in their earnings revisions. They haven't really flipped positive in a major way yet, but they're really headed back in the right direction and showing some recovery there. So I think that's really the threat to tech going into next year, is not that their earnings necessarily fall apart, but rather that there's some competition.